Welcome back, everybody. My name is Mike. Welcome to OnChain Analysis. So today we are looking at Cardano. This is one of my favorite projects, and I figured I would take a little bit deeper dive today into Cardano. I feel like, just some really great recent updates with the Merry Hard Fork and, with the recent price rally. There's just been an increased interest in some of the technicals and some of the fundamentals behind the scenes. So I figured I would talk about them here today. So let's jump right in. So Cardano is managed by IOHK, which stands for Input Output Hong Kong. Cardano ADA is a smart contract platform focused on peer review and scientific study. It is marketed as a third generation blockchain. The coin currently is down around 32% from an all-time high established in January 2018. The market cap is ranked fourth on Brave New Coin market cap table, and ADA development began around 2015. It began with a token pre-sale, which raised about $62 million, and that happened in Asia, mostly in Japan, around September 2015 to around January 2017, where a total of 26 billion tokens were sold for around 2/100ths of a cent. That's right. I wish we had a time machine to go back and buy it for that price now. So public trading of the ADA token began on October 1st, 2017, and there is a hard cap of 45 billion ADA tokens, 13.88 billion of which will be issued through staking rewards. The team initially included three conglomerates which held around 5 billion ADA between them. The Cardano Foundation, which aimed to standardize, protect, and promote ADA. Emergo, which aimed to develop, support, and incubate commercial ventures. And Input Output Hong Kong, or IOHK, founded in 2015 by Charles Hoskinson and Jeremy Wood. IOHK also works on Ethereum Classic, pretty much in the development, and focuses on research and development in cryptography and distributed systems. In November 2018, Hoskinson announced IOHK would be leaving Hong Kong and incorporating in Wyoming. Then in February 2020, IOHK donated around $500,000 to the University of Wyoming and established the Cardano Research Lab, which will focus on writing code in ADA smart contract language. The lab is also said to be designing a hardware tool for authentication and anti-counterfeit measures on Cardano. Hoskinson also mentioned future work with BeefChain, a live stake traceability platform. That was according to CoinDesk. So I'm sure most people know who this guy is. So Cardano is a smart contract platform created by Charles Hoskinson, the co-founder of Ethereum. Although Charles helped to get Ethereum off the ground, his vision for how the project should be run was a little bit different than the rest of the Ethereum team. That caused Charles to give up his place at the head of Ethereum so that he could create his own smart contract platform called Cardano. So what makes the Cardano protocol unique is that it's being rolled out in stages, with one major release at a time. By rolling out the blockchain in stages, Cardano can release better, cleaner, more secure code at the expense of sacrificing their first mover advantage. As a member of the Cardano community, I am remaining patient because, well, good things come to those who wait. So let's look at the Cardano roadmap. Cardano is rolling out in 5 phases. And as we can see here, the first phase is Byron. And Byron marked the initial phase of the Cardano blockchain. A little known fact is that Cardano's ticker symbol, ADA, refers to Ada Lovelace, who was often considered one of the world's first computer programmers. Released in September 2017, the Byron phase brought Cardano to the market with an MVP, or a minimally viable product. Users could send and receive transactions as well as store their coins on the official Daedalus wallet. That was about it. The real potential of Cardano would only be revealed in later phases. In phase 2, we saw the Shelley rollout. Shelley was a big deal because it brought staking to Cardano. Shelley is the decentralization milestone, since the introduction of Stata will decentralize validators. To put it simply, in phase 1, there were a small number of validators securing the Cardano network. Now that phase 2 has been implemented, anyone can become a validator now. This creates a more robust, more secure network that is difficult to compromise. In phase 3, the Goguen update brought smart contract capabilities to Cardano and introduced the Marlowe programming language. The idea behind Marlowe is that it will allow people with no programming experience to create smart contracts. So if I have a brother that's in Italy, I can easily create a smart contract program which can send and receive transactions for free, or almost for free. Developers will be able to create both fungible and non-fungible tokens, the equivalent of the ERC20 and the ERC721 token standards on Ethereum. In phase 4, the main feature of Basho is that it will bring side chains to Cardano. This will help the network to scale so that it can handle significantly more transactions per second. Side chains are a way for transactions to happen on a side network that's separate from the main Cardano base layer. The way a side chain usually works is that transactions take place off the main network. Periodically, all of these transactions will be batched together and validated on the main chain. Because the transactions are happening on a side chain, they remain unaffected by the congestion that might be happening on the main network. This is something we've been experiencing with Ethereum and has led to higher gas fees and a lot of frustration for developers. In the Basho phase, there can be multiple side chains running on the Cardano mainnet at the same time, and they can be customized to support different design requirements. In the last phase of Voltaire, the final phase will bring governance to the Cardano network. Like other networks, Cardano holders will be able to use their coins to vote on how the Cardano treasury should be spent and what kind of development work should be done on the network. Cardano coin holders will be able to propose changes to the network, and then other users will be able to vote on those proposals. Cardano will be truly more decentralized than any other blockchain. So let's talk a little bit about Cardano partnerships. In September 2019, Charles Hoskinson announced a partnership with New Balance Shoe Company. That partnership would be to authenticate counterfeit goods. Despite teasing the news before an official announcement, an official press release from New Balance regarding the partnership was not obtained. Other reported partnerships include Polymath, StudX, ScanTrust, Fincta Advisors, Dust Identity, PricewaterhouseCoopers, the Privilege Project, the Government of Ethiopia, and the Berkman Klein Center of Harvard University. So let's talk a little bit about Cardano Tokenomics. And let's see what's behind some of the Cardano's recent success. 72% of the total circulating supply of ADA is currently being staked. This has, which means that there's less on exchanges and has been driving the price higher. According to ADAPools.org, there are currently 1,761 active pools with 22.9 billion ADA being staked, representing nearly 71.8% of the circulating supply. At around 19.5 billion notionally, the total value being staked on ADA ranks first among all staking coins. Currently, Polkadot is a close second with a reported 18.7 billion staked. Monthly active addresses in the chart below increased substantially since the beginning of 2020, recently hitting a new monthly all-time high of just under 50,000 wallets. Daily active addresses also hit an all-time high of around 103,000 earlier this week. Active and unique addresses are important to consider when determining the fundamental value of the network. This is mostly based on Metcalfe's law. The data for total unique addresses could not be obtained. The top 100 addresses on the network currently hold around 35% of the circulating supply. The latest data from the Cardano data aggregator ADAPools has shown that around over 54% of all ADA wallets have delegated their funds to a staking pool. This means that there are currently 214,610 wallets holding ADA that have decided to allocate their funds to securing the Cardano network. These metrics point to the rapid decentralization of the Cardano network. What is interesting is that the average number of ADA held in each delegated wallet is decreasing. So what does this mean? Well, it tells us that there are more small-time players and retail investors utilizing Cardano. And this basically strips the whales and other large holders of their power over the network. I think we saw the importance of this during the recent Bitcoin dip. While everything else was dipping, ADA stayed pretty much stable. And so I think, as more and more people continue to stake their ADA, we're going to see greater and greater stability with an increase in price. So let's do a short comparison between Cardano and Ethereum. So Cardano promises to deliver extreme scalability as compared to Ethereum. While Ethereum is known as a blockchain 2.0, Cardano claims to be a blockchain 3.0. Ethereum's answer to the scalability issue is Casper. the future proof of stake program. Similarly, Cardano also relies on a proof of stake. So what does that mean? It means that the Cardano network does not have miners to validate transactions, but it has developed a unique POS algorithm called Ouroboros. Ethereum's Casper and Cardano's Ouroboros are different in the way that they select block validators. The Cardano blockchain will eventually have two layers, the Cardano settlement layer, CSL, and the Cardano computation layer. The first one is the ledger of account values, and the second one is the reason why values are transferred from one account to another. The Cardano settlement layer, or CSL, acts as the ledger of account or balance ledger. This is an idea created as an improvement on the Bitcoin blockchain. It uses a proof-of-stake consensus algorithm to generate new blocks and confirm transactions. Cardano's computation layer, or CCL, contains the data and how the values will be transferred. Since the computation layer is not connected from the balance ledger, users on the CCL can create customized rules when evaluating their transactions. The Cardano mainnet was released in March 2019, allowing for support of ADA's consensus algorithm, Ouroboros, which is built using a Byzantine fault-tolerant proof-of-stake network, or BFT-POS. POS allows for social consensus and decentralized governance, as well as securing voting on peer-reviewed protocol proposals within a decentralized treasury, which funds those proposals. The Byzantine fault tolerance, or BFT, is the property of a system that is able to resist the class of failures derived from the what's called the Byzantine generals problem in mathematics. This means that a BFT system is able to continue operating even if some of the nodes fail or if the nodes are acting maliciously. Means that the network continues to remain secured. There is in the BFT protocol, there is more than one possible solution to the Byzantine generals problem, and therefore multiple ways of building a BFT system. Likewise, there are different approaches for a blockchain to achieve the Byzantine fault tolerance, and this leads us to the so-called consensus algorithms. I won't bore you too much with a lot of these technicals, but basically, because there can be many different types of consensus algorithms, a delegated Byzantine fault tolerance works in the same way that our country's governance system works, for instance, meaning that it uses a voting system to choose delegates. During this process, a citizen votes for delegates which do not depend on the number of tokens that delegate holds. One of the chosen delegates is selected at random to be the speaker. Their job is to keep track of all the transactions that are being made on the system, which is then recorded on the public ledger. After that, the speaker proposes his own block, which he sends to all other delegates for confirmation. At least 2/3 of the delegates should approve that block to be added to the public ledger. This type of system is also used by the Neo blockchain. So transactions on the Cardano blockchain are divided into what are called epochs and slots. A slot has a 20-second duration, while an epoch contains 21,600 slots. An epoch is a total of 5 days. Stake pools will earn transaction fees and a share of the 13.88 billion ADA earmarked for staking rewards. On the Cardano network, the total number of transactions per week, shown here in the red line, had ranged between 1,000 and 4,000 since April 2018. Transactions per week nearly quadrupled from January to February 2020 and reached around 9,100 on August 4th, 2020. Earlier this week in 2021, transactions per day hit new all-time highs of around 34,000. Since August, this on-chain activity has once again increased to an all-time high. Since 2018, average transaction values per day decreased dramatically to below 10,000 US dollars. That is shown in the green on the chart. In mid-2020, average transaction values per day began to rise and recently hit a multi-month high of around 550,000 US dollars. The cause for a spike in average transaction values in March and July 2018 are unclear, but are likely related to large holders splitting coins between wallets and not necessarily the economic value transfer. Average transaction values are currently on the rise again and sit at around 106,000. The Mary hard fork on March 1st enabled Cardano to become a multi-asset network and introduced new features such as enabling users to create new tokens native to the Cardano mainnet and stablecoins. This recent upgrade will provide a similar experience as Ethereum to their users, but without the need for smart contracts. This means that there will not be an issue with insurmountable transaction fees. This is a problem that Ethereum has often encountered and that has made its network almost unusable for retail traders looking to leverage DeFi. With the Mary upgrade, users will also have the advantage of creating their own tokens, such as NFTs, and transact them on the Cardano mainnet. Token transactions on Cardano will not be more expensive than the ones that include Cardano's native cryptocurrency, ADA. Since smart contracts will not be used on the platform, a feature this is a little bit different than what's on Ethereum, meaning that since smart contracts are not needed, the entire system just runs more efficiently. Mary consists of one of the 2 hard forks that Cardano has planned in its transition from Shelley to Goguen. The support of the native assets on Mary will enable decentralized finance projects, or called dApps, to run on the Cardano blockchain. The Mary hard fork is a major upgrade that will unlock a realm of new possibilities for Cardano, and will definitely see larger institutional adoption. Will also effectively transform the Cardano testnet into a multi-asset network, enabling users to not only issue but also distribute their own tokens on the Cardano blockchain. And with the ERC20 converter, we should see a lot of projects migrating over from Ethereum to Cardano in the coming months and years. So IOHK has a new YouTube channel called Cardano 360, which airs on the last Friday of the month. In their most recent Cardano 360 on the last Friday of February, they discussed the Merry hard fork for multi-asset in the multi-asset era, and native tokens coming to the Cardano chain. Some of the other things that they were talking about were how the Cardano team is focused on the usability and user experience. Using the Cardano CLI, developers will see the creation of native tokens without the need for smart contracts, and users will have the ability to hold native tokens in Cardano wallets. And all tokens, both native and ADA, will have the same security and stability on the Cardano mainnet. Some of the recent upgrades were also announced on Cardano 360. First, the DB sync, shown here in the middle of the screen, will make information about the blockchain more readily available. The DB sync functionality allows tracking across the mainnet and records all on-chain events. Therefore, DB sync is a reliable recording mechanism that anyone can write inquiries on. There's also some big changes coming to Daedalus. Since anyone using the Cardano chain will be able to create their own tokens, the Daedalus wallet has been upgraded with a new token registry that will store and compare a digital fingerprint. This will be used to confirm the validity of native tokens on the chain. Operating in the Daedalus wallet, this new functionality will allow a user to select any coin on the wallet and will give them the ability to prepare that transaction. And basically, the protocol does this by weighing the value of that native token against ADA. So in the Daedalus wallet, you'll see the value of your native token that you selected in its value in ADA. So for instance, if you had an OnChain Analysis coin, might be valued at 1.389 ADA, for example. Essentially, these major changes deal with all wallet operations and how coins are selected for payments. Since the system becomes more complex when adding native tokens, this upgrade will provide the much needed algorithms for the coin selection process. So what kind of changes can we expect on the Daedalus wallet? Well, the new token section at the top of the dashboard will offer Daedalus users the ability to track and store native tokens as well as ADA tokens in their wallet. Each token will have a visible fingerprint stored on chain. This fingerprint is similar to a wallet address and can be labeled with a unique name, and it will be shown on the wallet interface. These updates relate to sending and receiving transactions. The new updates will prompt users to explore new native tokens. A minimum of 1 ADA currently is needed to send a transaction. During these upgrades, once they're finalized, multiple tokens will be able to be sent at the same time. Meaning, I can send, 3 ADA and, 2 native tokens, all at in the same transaction. The wallet will show the confirmation that the transaction or payment was received on the other end. The rollout for these updates will happen over stages. The very first stage of the rollout was the Merry hard fork, and multi-asset support will also come with the Merry hard fork, which means that anyone can send any type of token on the Cardano chain. It will support, for example, it'll support NFTs and other native tokens to the Cardano mainnet. So there was some updates to the YourY wallet and the Daedalus wallet. These changes are going to be facilitated through the Catalyst app. The Catalyst app will allow voting through the YourY wallet. A QR code will be generated which will register the user to vote. However, voters must register within the time frame allotted, and once this is closed, they won't be able to register. All voters will be rewarded in ADA, and for those of you who are interested in voting, please be sure to write down your self-chosen PIN code, because you're going to need that in the new Catalyst app. Cardano 360 also announced a lot of different funding programs that are going on in the Cardano mainnet for developers. For instance, a $400,000 budget for Cardano's developers. It's called the Cardano Developer Fund. Is a challenge to developers for creating a positive developer experience and building successful dApps. This fund will incentivize developers to build functional and innovative applications that can be adopted by users on the Cardano mainnet. Utility is the focus of this challenge. There was another one on there announced called the distributed decision making, which offers a 50,000 ADA reward, where entrepreneurs are challenged to submit proposals and ideas for the Catalyst app. This is called the Catalyst Value Challenge. A new buy and sell ADA feature on YourY will be facilitated through the Catalyst app as well. So the Merry hard fork combinator will also add a new upgrade and see significant changes on the Cardano blockchain. The combinator is a protocol version update that enables the use of native tokens on the blockchain. Basically, it's similar to the whole process of the upgrade is similar to throwing a switch across the chain, and from what I heard, there were no interruptions to the Merry hard fork. Similarly, in the future, other updates, Cardano really has been focused on making upgrades and changes to the mainnet seamless with with no actions needed on the user end. So I wanted to talk a little bit today about Babble Fees. So Babble Fees will be able to be paid in ADA initially. However, the Cardano team is exploring the use of other native tokens, which would allow users to pay fees in any tokens that they wish. This would take place through minting a token through the UTXO conversion process on the Cardano mainnet. The UTXO process will essentially weigh the price of the native token compared to ADA and declare that amount as a liability. It's similar to an accounting software where the ledger basically recognizes the transaction as a liability. This process is similar to a spot trade, and which will weigh the value of the native token in that particular point of time. Through the smart contracts feature, a transaction then is registered on the chain in the currency that was originally registered as a liability on the Cardano mainnet. With a flexible conversion process that tracks all these liabilities within a digital ledger, basically any form of currency can be used instantly across the entire world. This is truly borderless payments, offering free conversions from one currency to another, or one token to another. So these Babble fees, basically, it's essentially what they are. Allows for a snapshot in time of the value of any token on the mainnet. So Cardano really is, I mean, they're, and they talk about this in the Cardano 360 as well, but they're really taking this three-pronged approach, where democratized finance or peer-to-peer finance, is facilitating a vision of decentralization on the development platform, where developers can build and test, iterate, and innovate their projects before they're launched on the mainnet. They're also focused, part of their strategy is focused on the enterprise features for large projects and business utility, really focusing on the corporate use case for the Cardano mainnet. And the third prong is really focused on developing Marlowe for end users, people who want to create smart contracts, like people just like you and me who want to create smart contracts, on the user end. The development of a dashboard that's easy to use for any layperson to develop those contracts on chain for financial agreements, making the end user experience easier to use and offering practical applications for future growth and innovation. Basically, I guess I'll touch base a little bit on this. Templates are able to be placed on the Marlowe platform with only just a few fields to fill out, making it really easy for users to adopt the system. While the prototype has been on the Marlowe Playground with the alpha version released back in October 2020, since that time, like around 9,000 users on the Playground are learning how to build smart contracts. The Marlowe Playground is a learning tool that allows developers to continue to build their expertise and prepare to launch innovative projects on the Cardano mainnet. Embedding these codes in JavaScript, I think, was also something Cardano did that really allows for the pulling in of contract developers from across the spectrum of professionals in the industry. The process for creating smart contracts is also super easy. Basically, you go to the welcome page and you click on the agreement that's there. You choose a doc or a particular marketplace that you want to create the contract in. And then right there on the dashboard, you have a button to create a new contract, or you can pull up templates that you've previously used. The dashboard will tell the user how much longer each existing contract has until they're termed, and there's also a create button which can be clicked to add a new template and create a new contract. Basically, you click on it, it accesses your contacts, and you just type in who you'll be entering into the contract with. Basically looks and feels like an app store, where you can walk through this step-by-step process in building new smart contracts and updating old ones. I mean, it's very, very cool. This fully decentralized platform will really allow peer-to-peer finance transactions and agreements to take place in a truly borderless manner. So currently the Cardano mainnet recognizes 3 languages: Plutus, Glow, and Marlow. The Glow language is specific to the security parameters and was developed by Mutual Knowledge Systems, or MKS, which has become the company behind the development of open source use of the Glow language. Basically, Glow is is leading to a security feature that will allow protections for parties to enter into smart contracts with each other. It's a very simple language that offers interoperability, making it easy for developers to enter in much lower amounts of source code that will, continue to support many smart contract platforms, including Cardano, Bitcoin, Ethereum, etc. Cardano will be the first to launch Glow on the DevNet. Glow is much simpler than, say, Solidity of Ethereum or JavaScript, allowing even new developers to design and develop security codes. These developers will also become intricately involved in the innovation of Glow into the future, with just 6 lines of code built to be automated. It will protect your transaction in just a few minutes of work. It's pretty amazing. Cardano 360 also announced a partnership with Celsius. Camilla Churcher was there, and she talked a little bit about how loans will be, available on the Cardano mainnet. Camilla also vowed to reinvest a good portion of the profits back to the Cardano users, which sounds good to me. The Celsius community is also a large and vibrant force, and I truly believe it will add momentum to the Cardano evolution. Fees on the Ethereum network have been a major barrier for Celsius, and Cardano is just looking really attractive with lower fees which is a driving force behind Celsius, the partnership with Celsius and other projects that are planning to migrate to Cardano. Celsius is creating bridges between centralized finance, CeFi, and DeFi with the CelTech token, which will end up being a very important utility token to achieve higher yields on loans, and the users of, I think it'll be the user's coin of choice when it comes to borrowing and lending. Appreciation of the Celsius token will also offer great returns for investors. So once the Celsius token is live on the Cardano mainnet, it's something I'll be checking out. During the Cardano 360, we also learned about Load, or STK. Chris Snook, the managing director of Load Studios, or STK, was there with Rich Kopcho on the most recent Cardano 360 episode. Basically, they are the technology behind the Catalyst app, which was developed by STK, and will offer the Cardano platform a framework that will interface new products and new businesses. Basically, STK is offering an open source marketplace on the Cardano mainnet. They're doing this by using a multi-asset ledger. STK is a major portfolio company for hyperscale startups. They're known for commercializing layer 2, 3, and 4 solutions, peer-to-peer commerce, finance, peer-to-peer creative studios for go-to-market products. And they're mainly an integrator for on-tech solutions. Driven by research, the Load team is seeking the best-in-class infrastructure for the gaming and NFT space. Chris Snook spoke about this $1 trillion industry and the need for more efficient, secure, and affordable blockchain technology as we continue to evolve into the future. So in the charts, ADA has been on a bullish trend over the past few months. Appears that the bulls seem to be weakening as we move into the first week of March. Let's see. The bulls are currently attempting to arrest the pullback at the 21-day EMA, which resides like around $1.07. This suggests that the sentiment remains positive and that the bulls are viewing these dips in ADA as a good buying opportunity. The buyers will now try to push the price above $1.23, and if they succeed, the ADAUSD pair may rally to around $1.35, and then hopefully to an all-time high at around $1.48. The bears are unlikely to give up easily, however, and the negative divergence on the RSI shows that the momentum is weakening. If the current rebound fails to sustain, the bears will once again try to sink the price below the 20-day EMA. If they manage to do that, the pair could drop to our closest support down at $1, and below $1 we have support resting at around 80 cents. If the 80-cent mark does not hold, we can find further support down around the 50-day simple moving average, which is around 72 cents. However, I do not foresee us staying there very long if we do end up dropping that low, as buyers will be likely to buy the dip, and I know I'll be one of those. But looks like there's been some decreasing volume over the last couple weeks, and as people prepare for Bitcoin to see all-time highs in the near future, I'm sure there'll be some money shifting around to and from ADA. However, if history is any indicator of price action on altcoins, I'm sure that once Bitcoin hits its all-time high, we will see a second altcoin surge. Yeah, I mean, we originally came up to around 80 cents, broke that resistance and tested it as support for an RS flip. We weren't at the 80-cent mark long before we broke $1, also seeing an RS flip. And since that time, we went up to around $1.15 for, broke through around $1.15 and rested on the $1.15. And as of today, today is March 7th. So this pretty much wraps up all I got for you guys today. If anybody would like to reach out to me, let me know what kind of content you'd like to see on the channel, or just if you're looking for any specific technicals or fundamentals, you can hit me up on Twitter or email me at onchainanalysis@gmail.com. So my name is Mike. See you next time.